The General Building Materials division consists of approximately 70% of the overall group turnover, and contributing the bulk of the profits for the year 2010. The 30% contribution by specialized building materials, not generating the profits we would have liked given the pressure on the finishing end of the industry.
Well, let's delve into the general building side of things. We know that it's been very tough environment in South Africa, especially over the past few months. Have you started to see an increase in the activity on the ground?
Yes, pleasingly, since about August last year, we saw a marginal recovery in turnover trends, and this has continued into the new year. And we trust that it will see us through 2011. At the same time, in the finishing end of the business, the specialized area, we've seen a decline of approximately 11%.
And do you expect that trend to continue?
We believe it will soften, given the fact that we believe we've seen the bottom end of the cycle, and off a relatively low base, we should see some turnover growth.
We know that your cash position is very strong relative to what we saw in 2009. To my understanding, you're sitting on around 130 million rand in cash. What do you plan to do with that money?
Well, first of all, we'll need some of those funds to fund the working capital we'll require when growth returns in our business. At the same time, it positions us very well to expand, whether it's through new store openings or through the appropriate acquisitions out in the industry.
In terms of building plans, we know that that's decreased quite significantly. We're still seeing pressure coming through in that sector. How closely tied are you to the building plan side of things?
Well, we are biased towards the contractors servicing the residential market, so that indicator is very important to us. And it's important to take cognizance of the fact that even if building plans passed increases, there's usually a bit of a time lag before it converts into buildings completed.
Exactly, and I mean, looking at the mortgage lending side of things as well, we know that banks say that they're lending more. We haven't really seen that feed through. What has your experience been? Yeah,
it does tend to soften. The criteria is softened on the entry level for purchases. At the same time, it's incumbent on us to spread out portfolio slightly better and make us more accessible to DIY customers as well. The additions and alterations segment, which has been showing a level of a recovery.
Looking at your specialized building materials division, and I was chatting to Simon Brown a little earlier, we're talking about the mix in terms of sourcing material locally versus importing. How much of your goods do you import?
So in the specialized segment, in, for example, ceramics and ironmongery and your wholesale sanitary ware businesses, we've got a significant importation component. We do also source locally, but at the moment we are quite comfortable that the importation levels give us a good pricing position to compete with.
And you also basically cater for the higher LSM market in South Africa, is that right?
In the ceramics cluster specifically, our brands are aimed at the upper LSM markets.
And how has that been performing?
It's been under pressure, significant pressure. Amongst others, we are spreading our stock portfolio to allow us to access a wider spread of the LSM segments in the market.
It's quite interesting. I mean, you operate in South Africa. What about looking beyond South African borders and perhaps looking north of the borders here?
Yeah, we are primarily a South African business, and although we've got a wide national footprint, we believe there are still some opportunities, and we'll take advantage of those first and foremost. That does not say if the appropriate acquisition opportunity beyond our borders occurs that we won't look at those.
In terms of pricing power, how do you stay competitive?
Well, first and foremost, we need to, on the procurement side, be effective, and we consolidate a large section of the business's portfolio and basket gets consolidated when we negotiated pricings. So procurement is the most important aspect, but at the same time, your infrastructure cost base needs to be efficient.
Okay, let's look at the margins. We know that your operating costs, so your expenses, have come down marginally, and that's if you extrapolate the new stores and the DOH acquisition. Tell us about how you plan to keep that momentum going.
Well, we'll probably find in the coming year that we save in certain areas to invest in other areas. So we don't expect significant further savings on the infrastructure cost base. We're looking at our procurement function to help protect our gross margins through leveraging off the total basket.
Earlier you said that the cash on hand at this point is going to be used going forward when we do see activity increasing. So in other words, you're pricing in a better future for Iliad, is that right?
Yeah, we are confident. We've put in a lot of hard work. We believe we are well positioned to leverage off an industry returning to growth gradually in due course.
When can we expect turnover overall to hit double digits?
Probably not before the end of the year. The bulk of 2011 will be challenging.